Welcome back, everyone, to another episode of Profluence Sports here on an overdue one, because and probably good timing with Dan McClory, who you might, if you've been paying attention to the news, just did an awesome transaction with Brera and now becoming Soulmate, and we'll get into all that today. But really redefining the MCO model, and one of the first ones doing it through public companies. So Dan, anyway, appreciate you coming on today, and excited to dive into this one. This will be much different from any conversation we've had across our nearly 300 guests so far.
Thanks, Andrew. I'm looking forward to it and happy to share with your viewers whatever you want to talk about.
Cool. Let's start high level, right? Like the inception of Brera, and then maybe a little bit of your background before as well. Obviously, was sports near and dear to you as well, and then the investment world and sort of it all starting to tie together. So we don't have to go too deep here. We can find your background online. We'll post that, but just some context and then more, formation idea behind Brera and what it became.
Sure. My day job is as an investment banker. I own a boutique investment bank called Boustead, and we've specialized in small cap IPOs, companies 50 to 250 million valuations, raising $5 to $25 million. So just very modest, very down to earth type transactions. I'm also on the board of the USA Track and Field Foundation, which is the fundraising arm for that Olympic sport. Steve Schwartzman is our biggest donor. We have a lot of other notable people that are on that board. So extremely active in sport in general. And then I'm a dual US Italian citizen. I'm an Italian by marriage, an IBMer, I like to say, where my wife's Italian, and I've been going there for longer than you're old, and speak the language fluently, have residency there. So the idea of putting together a publicly traded company with an amateur team coming out of Milan and then expanding into top tier teams in tertiary geographies and culminating with a Serie B team in Italy is not that far out of the question, given my background. I spent a lot of time in Italy. I consider myself to be culturally aware and not the typical ugly American showing up saying, I'm going to tell you what to do. I think I've absorbed how that country works and how to not just get along and get by, but to do well.
And we've seen a lot of the MCOs come out. Where would you say you guys, like, what's sort of the strategy for you internally, right? Like we've seen, not going into private conversations or other things, but we've seen the big redbirds and what they're trying to do. Then you have more of the minority stake owners like the Arctos. And then there's been some ones that, there's some lawsuits out there of people that didn't live up to what they said they were going to do, right? There's this whole slew of different multi-club ownership MCOs. What was sort of the strategy, and what's this differentiation that you guys are building? Because you've clearly done it different from everyone else so far.
Yeah, our strategy, not to borrow a line from Nike, was to just do it, right? So you didn't mention a whole tier of sort of wannabe MCOs or wannabe sports owners who are running around trying to raise a fund of 50, 100, $200 million. And when they get that money, then maybe they can go out and feel that they're worthy enough to buy something. We just decided let's acquire what we can at our own modest level. And let's use that as a platform for getting listed on NASDAQ. And then let's just keep expanding, but not to wait until we thought we had 9 figures in the bank or some luminaries, in our cap table or some trophy assets to acquire, but just start right where we were. So that was what drove us initially. And then we got to the point where we said, we've got to somehow take it up a notch. And that was the thinking behind buying a Serie B team in Italy. We had 3 top tier teams, but in countries like Mozambique, Macedonia, and Mongolia, and nobody's ever watched any of those teams play probably. I said, we've really got to do something that's more notable. So we looked at all 20 teams in Serie B, met with 12, negotiated with 8, got term sheets from 4. Thank God we didn't buy the other 3 teams that we didn't buy. And we bought Juve Stabia, the other team of Naples, as I like to tell Aurelio De Laurentiis, who owns Napoli. And he said, Dan, it's great. I think it's a wonderful way to brand it, but just bring a lot of money. And we said, okay, don't worry, we will. We have ongoing access to permanent capital from the public markets, and watch this space. So I think taking an active, let's go do it. And if we stumble and fall along the way, we'll just dust ourselves off and say, okay, let's do it slightly differently, but not to wait at the starting gate until we decided that we were anointed and could go out there and be somebody. And the names you mentioned and the firms, they're very well known, well regarded, mostly well respected. And, we're doing things at our own, lower level, but I think impactful nonetheless.
Yeah, and something I found interesting as you dive deeper into the space, like you mentioned, is, again, there's different ways to do this, but you hear a lot about hey, raise venture capital, or like on the flip, if you're an investor, raise from LPs and do this fund and try to do these teams. You've done a lot of these taking companies public, right? And I just think, especially our listening base, and frankly, even myself, like just not super well educated on the advantages, the disadvantages. Why do you believe, and I'm not just saying for this company, but just in general, why do you see that as a viable route, or what's the preference for you, and just give people some context, because I think there's companies out there that maybe could benefit from going public but just have no education or context around it, because you're just not taught it, right? You don't come up with it, so most people don't think about it unless you're massive or super huge, which isn't the case, right?
Right. No, you're dispelling a common fallacy that exists in the sort of IPO world. Everybody thinks, you have to have Goldman Sachs as your underwriter, and, Skadden Arps as your law firm, and a Final Four auditor as your accountant, and you have to raise 9 figures plus. And, all of those things are completely untrue. Every day, a company is going public in the size band that I described. Maybe they're worth 25, 50, 100 million, and they're raising $5 to $15 million, and they're debuting on NASDAQ or the NYSE American Exchange. And some with great success, some, so-so, some, as we saw with Brera, our share price going down and then building back up. So knowing that almost intuitively, and that being my day job, made it a lot easier for me to say we should start with a public company context for this MCO. So I guess the first myth that I would debunk is you can go public, depending upon meeting the NASDAQ listing requirements, which are not incredibly challenging. You got to be a legit company. You have to be compliant. You have to have certain net worth standards. You have to raise certain minimum amounts of capital, but all of which are achievable. So that was from the beginning the whole reason for creating Brera, that we were going to step out and be first as a public company. Don't you or your listeners come under this false pretense that being public is only for a certain rarefied air. It's not. Now, the flip side of that is, I mentioned earlier, first, that you have ongoing access to permanent capital, which you do. You may or may not like the price investors are willing to pay. You may or may not like where your share price is, but you can always get capital. So that's number one. You, of course, have disclosure responsibility. So everybody knows what's going on. Everybody can see you're making money, you're losing money, who your major shareholders are or aren't, what material events have transpired. You have to report on these things and disclose these things. But I would say that overall, in Brera's experience, it was far more positive than negative. And the fact that it qualified us to be considered for a digital asset treasuries transaction, which we put together with Soulmate in the middle of September, is kind of an exclamation point on that. It never would have happened as a private company. So just like, Andrew, when you've closed a deal, when you've completed a transaction, when you've accomplished something or succeeded at something, the phone rings, right? Everybody calls you. Andrew, how'd you do that? Oh my gosh, wow, that's really cool. You built this kind of a company, or you put this company together with that company, or you came out with this kind of a product or a service. Well, the phone rings, and I can tell you, I've got more than half a dozen other primarily soccer clubs that are in various stages of the process of doing their own IPO, some through my investment bank, some through others. I'm happy to give frank, fast advice to anybody who wants to hear. So I think you're going to see more clubs that step into that realm. And there are scattered examples of a half a dozen or so that you would know, from Manchester United, the best known of them all, to other ones like Benfica having a small piece that's publicly traded, not the entirety or a control block. So it's definitely achievable. And I think more investors and backers of sports ventures and single club owners, multi-club owners should really look into being public.
Yeah, and tell us a little bit more now. Yeah, first off, it's really helpful context. I think a lot of people, you know what you know and don't know what you don't know. And it's one of my, I guess, pet peeves right now is a lot of companies used to go public earlier. Again, I don't want to go too macro here and get off topic, but like in OpenAI, I started using ChatGPT in 2020, 2021. I could have told you, like, if that was a public company earlier, that's a super easy investment that is rocketing. Like if you knew Apple or Netflix was early, now you don't even have access to those things. So anyway, that's combo for a different day. It's one of my pet peeves of sort of how the public and private markets have shifted. Now, give us just a little more context too on like SPACs. Like, why do you prefer the way you're doing it versus, we had the big run and there was a ton of companies using a SPAC, special purpose acquisition vehicle, or whatever it stands for. In a company, I think was the C, not vehicle. In 2020, 2021, and a lot wanted to buy sports assets, but none really, besides DraftKings, didn't really see many go through.
Yeah. I mean, my investment bank has never originated a SPAC. We have had a number of our companies that were in process with the SEC and NASDAQ that were picked off by SPACs that said, hey, why don't you join us? And instead of doing your IPO with Dan 2 months from now, let's do something today. But I will tell you, the great majority of all SPACs did not work out well. That was a big bubble in 20 and 2021. The fish were jumping in the boat like you wouldn't believe. And the dirty little secret of all the SPACs is that almost all the money that was raised was redeemed by the investors. So it had backup lights on it. Okay, so they raised 100, 200, 300, 500 million. And then you have 1 to 2 years to complete a business combination and acquire, an operating company normally. And the closer you would get to that deadline, the more the investors would say, hey, I may or may not approve something. You got to pay me more. So they would get paid more money. But basically, when the companies that the SPAC promoters were behind found a target, in most cases, the investors refused to approve it and they had to give all the money back. So it was like a total waste of time. Of course, there's exceptions to what I described. There's a few SPACs that went well, but most of them, number one, didn't even complete. They sent back all the money. And then the ones that completed, went from $10 to $1 like right away. And so much value was destroyed and wiped out. And, you saw SPACs overpaying for companies to try to win the war to get that business. And then the price just summarily went down. So you can tell I'm not a SPAC fan at all. You should just, it's cheaper, faster, better to do your own IPO. It just is. Takes the same amount of time, maybe less time, and you're far more in control. You're never totally in control, but you're far more in control running your own IPO than you are jumping onto somebody's SPAC.
Yep. And coming off that now, so obviously you have this idea for Brera, you start acquiring some clubs, it works, you go public, now you do the Soulmate. What's it look like now going forward? Is it running sort of as two separate businesses under one thing where you sort of have the Solana treasury company and your clubs you own? Is it merging together? Is there a deeper, bigger play? Sort of how do you see these worlds coming together? And, what's the next evolution of this? And then obviously, at least from the stock price side, some big investors, if you want to mention any of those or anything there, you had some cool people involved on both the crypto and sports side.
Sure. Yeah, so we recently completed what's called a DAT, or a digital asset treasury transaction. And about 25 of these have been done with companies listed on NASDAQ and the NYSE American exchanges. It involves an operating business, in our case, our multi-club owner of soccer teams, receiving an infusion of cash. We received $300 million from primarily institutional investors. And the business takes a new orientation, and that is, in most cases, to acquire crypto assets, so digital assets. There have been DATs done for Bitcoin, the most famous one, of course, being Strategy and Michael Saylor. They've been done for Ethereum. Ours, in fact, was done for Solana, but not just to buy crypto, but to be a Solana infrastructure company. So to get involved in payment systems, exchanges, tokenization, all the different aspects of that food chain and ecosystem. Because if your only business is how quickly can you buy crypto and hopefully it goes up in value and it's accretive to your balance sheet or your net asset value, or your MNAV as it's called in the DAT world, that's kind of a race to the bottom because crypto will always adjust and correct. So in our case, it was pointed out about all the parallels between crypto and football. And this was the investor group that brought us this particular transaction. Remember, in my day job as an investment banker, I had already done 5 of these transactions. So I knew intimately, what the moving parts were and what were involved. And 2 have sports implications. Signing Day Sports was an IPO that we underwrote at my investment bank, Boustead. And another one was called Zone. Zone is the ticker, but called Clean Core. And they just completed a deal with the Doge Foundation. So that's a team with the Doge Foundation. And now they're buying Trieste, a team in Serie C in Italy, a tier below ours in Serie B. So there's a lot of parallels there. You also know that Juventus is 11% owned by Tether, which is the world's most prolific and prevalent stablecoin. And we heard from the Agnelli family office, which looks after Juventus and Stellantis, which used to be Chrysler, about what did you guys do at Soulmate. So there's a lot of parallels from fan tokens, digital merch, ticketing, fan engagement, the amount of passion that goes into crypto as well as into football. So this was pointed out to us early and often and kind of used as a point of differentiation for the group that we went with, which is overwhelmingly Abu Dhabi based, some of the same money behind Manchester City and City Football Group, in fact, and also some notable investors like ARK, and Cathie Wood, Cathie Wood, who decided to get behind that $300 million fundraise for a Solana infrastructure company, which is now called Soulmate, kind of a play on words, SOLMATE, SOL being the abbreviation for Solana, that cryptocurrency, and our ticker now is SLMT instead of BREA, which it had been for years. So it remains to be seen what the ultimate disposition of the legacy business in football and football teams will be. Clearly, we've been supplanted by a much bigger play and a much different type of asset. But we have more than enough examples, including the ones I just cited, to show how it's not such a strange marriage that has occurred here between crypto and football. So we have lots of potential initiatives, lots of ideas, lots of ways to pull those businesses together. But make no mistake, the focus of the Solana infrastructure business will be the business of Brera going forward.
How do you see that? Like now going a little, I think it's important to understand. I always try not to, I might need to launch like another podcast just to have more generalist conversations, but like the treasury space, I know you touched on a bit, is super fascinating. And even if you just look at like the administration, a lot of the new policies, and there's a big, I don't know, maybe foreshadowing, but like you see like we're in the early stages of some sort of innovation. And obviously like you guys are trying to be a foothold in that. How do you see Solana, Bitcoin, Ethereum, right, from what you understand? And I get like you're an arm's length from it to some degree. But like, you know, talking with these big sophisticated investors and people that are deep in this space, like what's got them so excited about like building these models, you know, because I think to the average person, they sort of just don't get it, right? It's like they get rolling up soccer clubs, but they don't get like what a treasury is or does or and obviously that's why, you know, retail or most people are behind. But I'm just curious from your lens, sort of what are these sophisticated, you know, so-called investors, like how are they seeing the space and talking about it?
Sure. Yeah, I mean, I'm not a crypto guy. Okay, I think you have more knowledge in your entire body than I have in my little fingernail about crypto. I mean, you know this from the way you're a thought leader in so many different areas. And you know, you also do a very good job with Profluence of showing people how to relate the unknown to the known. The whole segments you've been doing on youth, and you know how that's just a juggernaut that's just coming along, irrespective of all the professional teams and everything else. So I would say first and foremost to all your listeners and viewers, the velocity at which sports moves as a business is very similar to the velocity of crypto and digital assets. It's like nothing I've ever seen in the traditional capital markets. It's 24/7 on steroids. It's 200 miles an hour with your hair blown back. And a lot of people would say that's the same cadence of sports. Sports has so many X factors, so many variables, so many things that cause the best laid plans to be thrown out the window, you know, whether it's injury or weather or innovation or, you know, other speed bumps and problems you come across. They're just, you can have your plan, but be ready for it to change. And that's kind of the world that I'm seeing of digital assets and crypto. So I think they both move at a very, very similar velocity, even though they're two very different assets or asset classes. But people like your audience, like your members who are attuned to the rhythm of sports, which is very fast paced, will find nothing different in crypto. Okay. So they're already used to that, right? They've gotten like conditioned that, you know, change happens, it occurs rapidly. You better be able to adapt or you're dead. So I think they're more assimilated to it than they might otherwise think. Definitely the current administration has embraced and enabled digital assets. The Trump administration wants the U.S. to become the capital of crypto. They don't want it to be done in some Caribbean or, you know, South Asian locale. They want it to happen here. They want stable coins to continue to be pegged to the U.S. dollar, not, you know, some currency in Venezuela. So, I mean, I think that's very clear and very imperative. And now crypto is no longer a crime like it used to be, and you're not going to get, you know, unbanked or debanked if you deal in crypto, if you do it compliantly and properly, of course. So I think all of that is a great tailwind that's enabling this current world of digital assets. But going back to relating the unknown to the known, there are so many analogies of things that can be done in sport. And I mentioned some of them, from fan engagement to tokens that are done properly. There were some abusive fan tokens that were done that were just not value additive. But I'll give you some examples that we've been able to implement. So, our team in Serie B in Italy, last year we were in the playoffs for Serie A. And, you get promoted, it's like a 10 to 15 times valuation increase. Management came to me and said, we got to put together a bonus pool for the players, Dan. We figure 3 million euros, it's 30 guys, 100,000 apiece. Let's do it. I said, great. And they said, are you in for half? Because at the time we owned 48%. I said, yes, but I'm going to pay in shares. They said, what do you mean? Oh, I'm going to give you my NASDAQ shares in Brera, because if we get promoted, our shares will go up 10 times. And so you may never have heard of a guy called Odell Beckham, who famously took his NFL bonus in Bitcoin, and everybody laughed at him. And now they're crying 3 or 4 years later because he just beat the pants off of them in terms of his return. So we did that. We got within one game of qualifying for Serie A. We didn't make it, but they saw that. The other thing was we put shares of Brera on the balance sheet of Juve Stabia at a very low price, the price at the time. And of course, when this transaction hit, the shares go up 8 to 10 times in value, and they've settled in at about 5 or 6 times the original value. But everybody's saying, well, Dan, you're the Warren Buffett of Italian soccer because you did this. And I'm like, I'm the same guy I always was. I just did it because it was a good thing to do at the time. And I had to convince the league that NASDAQ shares were cash equivalent assets and were viable on a balance sheet. Now they're like, Dan, I guess you were kind of right about that. I'm like, yeah, I guess I was. So those are a couple of very easy to understand, down to earth examples of where faster moving assets like crypto could be used to great benefit. And of course, things go up and they go back down. But the big difference that I've seen, and you know this, Andrew, is a lot of people around the world, unlike you and I and many of your listeners, they've never had a realization. They've never had something very small become something very big. And they've never seen the benefits of all that value being created, accruing to themselves and others around them. So you start to create believers when they see things happening and getting done. And maybe it's the Soulmate overlay to Brera, and now people go, wow, it can happen. But not everybody has the same equity culture that we enjoy here in the US and that you and I have experienced as business people. So don't take that for granted and understand that's a tremendous asset, because that'll allow you and your listeners and all the various initiatives they're involved in to persevere and get over speed bumps and actually make it to that successful outcome.
Yeah, that's very interesting points. And yeah, I think that's just a normal, I guess that you at least have the Italian side of it, but
And
the
they're disbelievers.
non-gratitude of many of us Americans.
Yeah, no, they've been
Yeah.
disbelievers. They're doubting Thomases, or Tommaso Dubbio, as we'd say in Italian. But now they're like,
Yeah,
wow.
they're very risk adverse.
Totally.
I know we got 5 minutes left. I got to ask you this. You do business transactions all over the world, and I have this discussion, but I think it's fascinating I have it privately a lot, but I think it's fascinating to bring it publicly to as much as you can. I'm curious, just bring up the Italian, like Europeans to me are very risk adverse business people. And then you have other regions. I'm curious, what have you seen? If you look at Asia, Middle East, Europe, we'll just call them like Australia, South America, Africa, North America, do you see like any sort of things of like how people move and how to navigate, how to learn that? I think once you understand it, again, it's harder to have it on a public conversation. I think in private conversations, you can really go deeper. But I think saying risk adverse about Europeans is pretty fair, at least from what I've witnessed.
It's 100% fair. It's more than deserved. And it's especially as it relates to Latin Europeans, where I have a lot of experience from Italy and elsewhere. They want to complain about us having all the breaks and us having this greatest capital system in the world, and us having the ability to, start companies and start small and get big. But when you ask them, hey, do you want to invest in something? Hey, do you want to take a chance? Hey, do you want to take a, like I had to buy out my partners, 2 great Italian guys that I know for 30 years, because they thought it was too much of a risk to buy a team in Serie B. I said, guys, you're going to miss out on making so much money. Okay. You don't want to do this. No. We do, because we might fail. And if we fail, it'd be terrible. And I said, yeah, we'll just dust ourselves off, get up and try it again. So, these guys love to complain, but when it comes time to, pony up and take a chance and put your money in something and risk and fail, they're nowhere to be found. Where are the cultures and geographies where it's the opposite of that? Definitely China. China's got so much mojo. The guy starts out selling vegetables on a corner. Next thing you know, he has a small shop. He has a supermarket. He has a distribution. I mean, the work ethic and the Horatio Algers every day that take place in China is mind boggling. It really is. I mean, they're ready to try, ready to fail, ready to recover. Unbelievable. Africa is another geography that you mentioned. It's kind of like, you got nothing to lose. Let's go. Anything's better than what's happening to me right now. And I don't mean that disparagingly in terms of Africa, but it's very much developing. We saw it in Mozambique. We're in Mozambique. It's the second poorest country in Africa in terms of GDP and opportunity and everything else. But people work their tails off. They're going to do whatever it takes to improve their lot in life, in sport, in business, with their families, everything else. So you want to find a couple switched on regions. I would say Southeast Asia in general. I'd maybe exclude Japan from that. Sorry about that to the Japanese people, and maybe even Singapore. But I would definitely say it's happening in Malaysia. It's happening in China. And for sure all across Africa. And Africa's not created equal, but it really is present there. And it's great if we're ever down or if we ever think things are tough. You meet some of those people, they're kicking butt, man. They don't care. They're just going out and doing it, which is very invigorating.
Yeah, it's super, super cool, and appreciate the perspective. High level, last thing, what's interesting to you in sports? And, what are things you're paying attention to? I mean, you were just obviously in Japan with track and field and obviously with all the clubs. Like I know we talked about youth a little bit, but what's got you excited, or what are you keeping an eye on, or where are you seeing like, this could be an opportunity? Like I would say you saw MCOs early, like, where's sort of your feel right now?
Yeah, I mean, I'll comment on a North American development. I'll comment on kind of rest of the world. I think the valuation arbitrage, buy low, sell high, add value are definitely in Europe and continental Europe and Latin Europe. On top of that, the ones I just disparaged for not being risk takers, the UK market, US market is almost perfect, so there's not a whole lot of arbitrage there. UK is getting that way, Nordic Europe perhaps, but, Southern Europe, mainly because of the opacity that is perceived to exist, in a lot of cases does, gives rise to that. So, but if you're willing to take some chances, but be diligent and do your homework, I think you can find some undiscovered gems. I'll say a major development that's got on my radar is with the USL and promotion and relegation. I mean, I think that's something super interesting. I think it's going to lead to fan engagement, perhaps even greater media engagement for that league, which doesn't have a whole lot of it to begin with. But I think them taking the first step, and I think, I'm sorry I'm forgetting his name, but I spoke to his family office, the former Carlisle CEO, who stepped up in a big way to invest in the league. Super important. What a great stamp of approval to put on that. So those are a couple areas that I'm following. As I always like to say, there are riches in the niches. And I think the niches continue to be some of these less discovered and perceived to be more difficult business environments like Southern Europe, and now being on the hot seat for promotion and relegation with the USL. So those are a couple of things that have gotten my attention. Of course,
Yeah.
the continued growth of the women's game in soccer, right? We take it for granted in North America, but it's not created equal. A little bit more so in the UK, but in continental Europe, forget about it. We hosted the Final Four of Serie A women at Juve Stabia, our Serie B club, last month. And great teams, really good players, but it just doesn't have the following yet that you and I experience here in North America. It just doesn't. I think it's coming. So you might see us do some things in women's soccer separate and distinct from men.
Super cool. Yeah, and you're thinking of Q Lee from Carlisle and the USL transaction there. But super cool. Well, Dan, really appreciate you coming on. This has been awesome. Where's updated information? Like, is your website ticker? Where can people get a little bit more? We'll put all the links to you for all your socials, so you don't need to say any of that. But just from high level, if they want to learn more about what we talked about.
Yeah, it's out there. I mean, our stock ticker changed recently. It's SLMT for Soulmate, SOLMATE. Used to be BREA, but SLMT. And then BreraHoldings.com. So BreraHoldingsPlural.com, BRERA Holdings.com is where you can find out all about Brera. Of course, that is changing. It's going to be adapted into the Soulmate identity with the football clubs, a subset of that and a smaller component of that. But those are the two best places. And of course, if you go to sec.gov, You can find out everything and more that you want to know about Brera, Brera, and you can get into all kinds of information there. But those are the best places. And boy, by the way, Andrew, just
I
like
lo-
you've always been kind and judicious and open with your time, like bringing me up to speed on trends and developments, and not just by reading your stuff,
yeah,
but having access to you. I'm happy to talk to people.
yeah,
I'm happy to give them input, tell them what I
love it.
know, what I don't know, help save them time on their perhaps similar or dissimilar journeys. So to the extent that I'm useful or knowledgeable, and no
I
problem.
love it. Yeah, we'll bring you in sometime to talk about like sports companies going public to just members of Profluence, and I think that'd be an awesome discussion. We just had an M&A guy that does like smaller M&A, and it was super super helpful. So yeah, no, I appreciate you extending that, and then yeah, we'll make that happen.
You got it. Thanks a lot.